To hear some of the chatter in financial markets and corporate America's C-suites, a U.S. recession is imminent and inevitable. While the danger of a downturn has risen as growth has slowed, most economists argue a contraction is unlikely in the immediate future, given the continued strength of the jobs market and the more than $2 trillion in excess cash on household balance sheets. It's next year they're more worried about, as the Federal Reserve's continuing interest rate hikes increasingly bite and decades-high inflation eats into that cash surplus. Ex-Fed official and Deutsche Bank AG economist Peter Hooper was among the first to forecast a recession, and puts the odds of one happening next year at 70% plus. Success will also depend on forces beyond the central bank's control, a point Fed Chair Jerome Powell himself has made, amid supply chain shocks caused by the pandemic and Russia's Ukraine war. Based on the critical assumption that the worst economic effects of COVID-19 and the war are behind, Moody's Analytics chief economist Mark Zandi is betting the Fed can pull it off. A recession would likely throw hundreds of thousands of Americans out of work and trigger another big downdraft in the stock market. Biden on Friday touted the latest sign of strength in the jobs market, even as he acknowledged it's likely to be overshadowed in American minds by the pain of sky-high inflation. The housing market is buckling under the impact of a big jump in mortgage rates engineered by the Fed, with new home sales plummeting in April by the most in nearly 9 years. The Nasdaq Composite Stock Index has slumped into a bear market, while corporate bond spreads have widened to reflect a growing risk of recession. Megan Green, global chief economist at the Kroll Institute, says such concerns are premature. Consumers, the bulwark of the economy, still have a lot of financial firepower built up from earlier in the pandemic, when they were cooped up at home and showered with stimulus checks from the federal government. Adding to collective consumer firepower is the rising number of employed people across the economy, with the May jobs report showing a 390,000 gain in payrolls and an unemployment rate holding close to a half-century low. Strong household and corporate balance sheets will keep growth positive for the next 12 months. After stripping out inflation, growth in consumer outlays actually accelerated in April, data showed May 27. But inflation will continue to eat away at households' nest eggs, making next year's outlook more fraught. I don't think we're going into recession in the next 12 months, Green said. The fate of the economy in 2023 ultimately will depend on what happens with inflation and how high the Fed will have to raise interest rates to reduce it to acceptable levels. The Fed's favored inflation measure rose an annual 6.3% in April, more than triple the central bank's 2% target.